How to work properly with Fibonacci levels in impulsive structures, in Elliott Wave structures, how to use Fibonacci retracements and extensions in impulses. We want to take a look at that today. There's a question a lot of you are asking me on a regular basis. So we want to demystify the concept. Let's take a look at the chart. Let's go. Yeah, hello and welcome to another MCO update. Today we want to take a look at the concept of Fibonacci levels, retracements, extensions, how to use them to define and calculate targets and support levels in impulsive structures. That is very important because the 5-wave pattern, the impulse, is a very central concept in Elliott Wave. It is a trending move. It's going with the trend or it's defining the trend, depends on which perspective you take. And well, you cannot really use Elliott Wave without the concept of Fibonacci retracements and extensions. They go together. The wave counts tell us which levels to use, and without the levels, we can't really properly define the wave counts. It's kind of a combination here of concepts that we have to use. And people get confused about, what are the ideal targets, support levels, and so on. So I would say we take a look at an example. This is a tutorial video. So I think we'll take a look at the link chart because chain link cryptocurrency chart formed quite a beautiful upside impulse between June 2023 and the 2024, March 2024 high. Now, I just thought we use this concept, this pattern actually, to talk a little bit about, first of all, how can it be labeled? And then how in the process we can use Fibonacci retracements and extensions to calculate targets. So we'll first of all take a look at the structure itself. It is a 5-wave move to the upside. Now it's always easy to label something after it happened, but this is a tutorial. So we just want to talk about the concept here, and I want to give you some examples. And it's good to have a pattern that really looks like a textbook pattern actually. So this here is the labeled chart. I mean, yeah, we can always debate whether the third wave is here or here. This is not so important for this tutorial. What I want to start with is the beginning. Okay, is the beginning. So what we see on this chart is already a 5-wave move in wave 1 itself. So we have a small 1, 2, 3, 4, 5. I don't want to use the Fibonacci levels to measure the waves in circle 1, but just wanted to show you it starts already with a 5-wave pattern to the upside. Now, why is this important? Because let's imagine we are at the top here. It's July 2023, and we start to see the first signals of a pullback. The question is always, okay, where can I now enter the market? Now, whether you are a pullback trader or not, that is really up to you. That's a personal decision. Not everybody likes to trade pullbacks. But from an Elliott Wave point of view, the correction, the pullback in a wave 2, in a potential wave 2, is typically the place to be, the place to enter the market. Maybe more or less carefully, that depends on your personal risk profile. But let's imagine we have here a downtrend. We have reason to believe that the downtrend is over because we see a first 5-wave move up. Then the corrective pullback should land in a certain area. And we know that after a wave 2 is complete, a third wave rally should be quite aggressive. And it was in this case. Now, the question is always, okay, what are the key targets for a wave 2? The key targets for a wave 2 are typically, I always say they're actually not targets. They are support levels. Because what you sometimes find is these boxes are not reached, especially when the market is very bullish or the trend is very strong, especially in crypto, that happens sometimes. Then these pullbacks, they are not very deep. And then people get regularly disappointed, which is why it can make sense to follow a couple of strategies, like a pullback. Okay, if the setup, if the price never dipped into the support region, the setup was never there. Well, that means you might then want to follow a breakout process, right? If, for example, the pullback is very shallow, which it wasn't in this case, but let's imagine it was, and the price, let's just say it only came here, didn't even touch the box, turns around. Well, then why do you not trade the breakout, right? So you might have, you want to have a backup plan. But again, that's not so much the topic here. So the idea is, as you know, entering in a wave 2 can make sense. You have to know the invalidation point, which is always the beginning of the wave 1. But there is an area, let's call it an area of interest, an area of probability where the price should turn around, should enter and turn around. And if the chart is interpreted correctly, then this should be the area between the 78.6 retracement and the 38.2 retracement, with additional levels, the 50% and the 61.8 retracement. And these are very, very common support levels for a wave 2, and this is what I would normally use. Now, I know that the 38.2 retracement typically creates a bounce. It did in this case as well on the 8th of August, 7th of August, but it often is a bit too weak to be all of the wave 2. Normally, we want a wave 2 to get to at least the 50% retracement, maybe even a little lower. Shouldn't break below the 78.6 retracement. It can do, but then at least not on a sustained basis, please, because if it does, the chances of invalidation are very high. But this is the set of Fibonacci levels I would normally use for a wave 2. Now then, how do we measure targets for a third wave? Now, we take the length of the wave 1, Fibonacci extension tool, we measure from the beginning of the wave 1 to the end of the wave 1. We go to the low of the wave 2. And what I'm typically tracking for a third wave, especially in crypto, is minimally the 138% extension. Now you can clearly see that was reached. You can clearly see that was reached. So does that mean, we just broke above it? Does it mean Elliott Wave doesn't work? No, it just means that from the moment on when we are here, we can really call it a viable third wave in an impulse. Going beyond the 138% extension is absolutely common in a third wave. Sometimes people say that, oh, you give this level, but I mean, it just broke above, what's going on? This is just a checkpoint, okay? It's literally just a checkpoint. The market can easily go higher. Nobody said it's the maximum, it's rather the minimum. I would actually call it the first ideal target. It is not, be careful here, it's not really a minimum because it's based on rules and guidelines, textbooks. It's not called out as a minimum technically. A third wave can be shorter. You know about the rules and guidelines already, but it's about what is probable. And we always have to go with the most probable scenario. Now, as you can see, the third wave reached a 200% extension, a very common extension level in a third wave. Not uncommon at all. But what we do is typically we track, first of all, a rally to the 138% extension. That means the high probability element of the rally is typically going to complete there, maybe a little higher. And then anything I would say beyond 200% is really way extended, but not very, very uncommon. So, and then when we know the third wave topped there, typically the fifth wave would end round about 2 Fibonacci levels higher, which it did. Yeah, it doesn't have to be exactly there. It's sort of roughly there. So you see the relevant Fib levels here on the screen. But yeah, that gives you ideal levels for a third wave. Now I would typically track the 138% extension, 161.8, 178.6, sometimes the 200% extension for a third wave. Then the question is, okay, we have a top in the third wave. What would be a support level for the fourth wave? And if we're dealing with an impulse, which we are at the moment, this video is about an impulse, then we draw with our Fibonacci retracement tool the length of the third wave. Now we measure the third wave and we select the 23.6 retracement, the 38.2 and the 50%. This is a standard support area for a wave 4. And as you can see, like magic, the price reacted to the 23.6 retracement. Sometimes the wave 4 is a little deeper, could reach the 38.2 retracement. That would normally be ideal. Yeah, I mean, this is the ideal box. Shouldn't break below the 50% retracement. Below that level, it's often not an impulse anymore. Then usually something else is happening, and it's usually the first sign of breaking. But as long as we are holding above the 50% retracement, this can be considered an upside impulse with one more high to come. Now, in this case, it was rather a shallow pullback, but at least it reached the box. So these are the areas we're watching. 3 levels to watch. And then the 5th wave up. We already talked about a target. Now, there are a few other ways how you can measure targets, calculate targets. Another one would be to take the length of waves 1 and 3 together. And then we go to the low of the wave 4 with the Fibonacci extension tool. And it is going to be the 61.8 extension is a very, very common one. Let me select that. That's the golden ratio, a very common one. Or the 50%. 38.2 they call in textbooks. I find that usually quite weak, but it can make sense depending on the context. So here, because the 38.2 retracement is clearly above the 3rd wave high, sometimes it isn't if the 4th wave is very deep, then you have a target area here. That's another target area for a 5th wave, or you just measure the length of wave 1 and you compare that with the length of wave 5, because they say in textbooks, oftentimes a wave 1 and a wave 5 has the same length. So let's see. I think that could be quite accurate. Yep, it was in this case. Okay, so it's actually a perfect example for a video like that. It does look like really nearly a perfect impulse, and obviously you will find that in the subwaves as well. Yeah, just an example. If we then zoom in a little bit and we take a look at this structure in wave 5, well, guess what? We also have a 5-wave move, right? So it's wave 1, wave 2, wave 3, wave 4, wave 5. And we can say, okay, micro wave 2. Did it also respect Fibonacci levels? Yeah, the standard support area we talked about in the beginning. And just measure that. Hold on. Yeah, it did not break below the 78.6 retracement, in this case $13.30, okay? Did the 3rd wave reach minimally the 138% extension, maybe even higher, or ideally even higher? Let's see. Oh yes, it reached pretty much exactly the 138% extension. Checkpoint. Did the 4th wave hold the 50% retracement? That would be ideal, yeah? Doesn't mean we have to test that level, we just have to hold above it. Yeah, in this case, it even reached the 38.2 retracement. Ideal. So what can I say? They are relevant, these Fibonacci levels, especially in impulses. They are very well respected. The guidelines in diagonal patterns, situation is a bit different, but this video is about impulses. So I hope you like the update. I hope it helped you. If you like the update, make sure that you subscribe to the channel, follow for further updates. Also check out our other channels like Morecryptoonline and More Trading Online. There are other channels where you get rapid market updates. Check out our community, become MCO member, join the community, join the conversation, ask questions, get more access to additional tutorials and much more. Have a great day. Thank you very much. Bye-bye.